Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. All right. Hello, hello. This is Abel Pacheco, your host for the Five Talents Podcast. We are very excited to have yet another amazing guest. Mu, thanks for joining, brother.
Hey, Abel. Nice to see you today. Thank you for having me here.
Absolutely, man. Thank you very much. We're blessed to have you share your story. And it's an inspiring one. So I would say anybody that's getting ready to listen, grab a pen and piece of paper, at least a few cycles that will leave some motivation for you. Just hearing someone else's journey to their success is just an awesome one. And Mu's story is no shortage of inspiring moments. So Mu, you're the co-founder of All States Capital Group. Introduce you, sorry. That you learned the ins and outs of investing really early on in your career, knowing that 3 years spent at a small investment bank in Wall Street. Then, in 2011, you took and started your own financial consulting firm. And then you were helping people with commercial real estate projects, and you kind of transitioned, all that stuff in New York, you transferred to, or kind of transitioned your time, effort, and energy to import and export company in 2013. And you started with $50,000 of borrowed capital and eventually turned it into and grew it to a multi-million-dollar business. So that happened within a couple of years, and it's just, it's really inspiring to hear. And so today you've kind of again transitioned into another successful run to really specializing in investing in creative financing for real estate investment projects. So you help like structure deals, acquiring off-market distressed properties, and creating the systems that bring businesses to scale. And I've interviewed your partner. I worked with them as well. Not worked with them. Sorry, we went to the same kind of educational, kind of journey and path. And just know that your partner is one of those top-notch, kind of high-caliber individuals. So knowing that he, kind of tapped you and said, let's go to work together. I know you're of the same pedigree, so I'm excited to hear from you. So let me turn it over to you. Tell us about yourself, who you are in your own words, and we'll just dig into a good conversation.
Sure. My name is Mu. I'm living in Houston, Texas. Originally from China. I come to the state when I was 20. I'm 35 right now. Come here for college. Went to a small town in Ohio. Study of finance and marketing. When I get to the state, I don't speak any English. All I know is ABC. For a long time, my classmate and my teacher, my English second language teacher, thought I'm from South Korea. Until one day they found out, I'm a Chinese. So that's probably take like almost a month to find out that. And then after college, luckily I got a job on Wall Street. That's right after the financial crisis. 3 years working in there. Start from analysis and become on the management team for 2 more years. So 3 years total. And 2011, I started my own company. It's a financial consulting company. And I was working on a very new area for me, which is the commercial real estate industry in New York City, specialized in hotel business. And I thought I know what I was doing but no. I was using my connections
Yeah.
and my knowledge from Wall Street for capital raise. But for doing a project, like doing products, like completely, I have no idea what it's,
Yeah.
like what's the financial, what's the commercial real estate is. So I have to close that company in 9 months because it's completely filled. I actually got a pretty good project on my, for fundraising, but I couldn't complete the project because looking back, I have no any knowledge about commercial real estate.
Yeah.
And I started 3 months later. I started another company. I borrowed 50,000 capital from my family, and I start a export import company
Mm-hmm.
for start at scrap metal trading. So I'm buying like scrap metal and send overseas for trading. And pretty quick, I found a good business model. So I'm growing pretty fast. I bought a lot scrap metal from the East Coast, and also in the same time, I started my own junkyard. And we were stripping cars and doing recycling for metals for 3 years.
Nice.
Also, in that, I see another opportunity. It's like the car parts business is actually, I would say more blue ocean strategy than doing scrap metal. So I changed my company towards to the car parts direction, and I sold my junkyard and get it completely into a car parts, and we're buying overstocks from large companies like GM, Ford,
Yeah.
for overstock material, and shipped to overseas in other country. So that company, till now is almost like 9 years. It's pretty smooth. Um, it runs pretty good, and I'm pretty much like auto driving that company.
Mm-hmm. Mm-hmm.
And at 2018, and I got plenty time, because I start play video games again. It's like, right? So I got plenty time, and I was thinking,
Yeah.
what's next? What's next? Like, what's
Yeah.
next challenge for me? And I was always thinking about, commercial real estate. That's the place, like I felt, and I always want to go back there. And I have a lot of interest on commercial real estate. In that time, I just don't know too much.
Yeah.
So pretty soon I decided I gotta, educate myself on this. So I joined a lot, seminars, like conference programs, and spend a lot, $1,000 for education fees and learning real estate. Start
Mm-hmm.
from
Mm-hmm.
different like assets class.
Yeah.
And about 6 months later, I started doing action. I flipped a few house. They're pretty good. I did some creative finance deals,
Mm-hmm. Mm-hmm.
some wholesale deals, and just for try to get experience. But I know that's not a model I'm looking for.
Yeah. Yeah.
And when the model I'm really looking for is in commercial real estate. But I do want to get more and more experience and knowledge on just basic real estate. And last year, 2019, I was I also studied at the commercial real estate, and I listened to Tim Broad's
Mm-hmm.
model, value add, multifamily,
Mm-hmm.
and that's it. That's the model I want to do. Like it's challenge to do, but I know what I can. I know myself what I can do.
Yeah.
So to end of last year, I partnered up with Javier. We met also in one event.
Mm-hmm. Mm-hmm.
Like partner up, I started Allstate Capital Group from scratch to doing um, value add commercial real estate, focus on apartments,
Yeah. And
mobile home
and
park and self-storage.
yeah, and quickly doing a few $1 million of multi-million dollar transactions, like really quickly with you guys. So let me pause you real quick because I'm going to ask you a bunch of questions about all this stuff. The parts that I want to highlight for our listeners and guests, right, is, Mu, did you speak any English when you were 20? No, right?
No.
Came over, like you said, had a hard time trying to. Well, his teachers had a hard time trying to understand, but as he's learning that, just to even get a second language, one, tremendous. But at 20 years old, moving to a new country, all kinds of culture shock, but not knowing the language, I think some people, would find themselves in that situation and, kind of throw their hands up and say, well, I can't do this. But you just have to have the persistence, and you can learn another language, just like you can buy multi-million dollar deals, just like you can, transition from one company to a second company to a third company, have some failure. And the second one, I think, is what I heard, the commercial real estate, and just didn't quite, go to where you have success you wanted to. So you transition to another business, had that success. It's the persistence, the dedication, and just kind of keep rolling. And you had success, multi-million dollar business, enough to where you could finally, like you said, on autopilot, or kind of just the business is running now without your time, effort, and energy. And you had enough time to play some video games and learn about commercial real estate. So those are all awesome. If you could summarize one or two lessons you learned through those new businesses you started, success or failure or whatever, just a couple of wisdom, a couple of nuggets, a couple of insights that our listeners can take and say, that was awesome. Anything from those first businesses that you ran?
Sure. First you need some kind of knowledge to learn. I mean, you don't need to know everything to get started. I mean, there's nothing like a perfect time to actually start. Like, you get some knowledge, it's basic to get started. That's really important. And really, really important is you need to find a blue ocean strategy. You need to find a good business model. Because like I go through many times I'm in, I would say, mistake direction. Which those mistakes, like for me, like I don't like mistakes, but I'm hard mistakes because I can learn so much from there. So like I'm not I'm not afraid to make mistakes. I mean, obviously I don't like make mistakes, but that's not I always learn way more from mistakes than winning. But during that time, you need to find a good business model, and the business model, blue ocean, is like if you have good business model, like your business is scale really easy and very less risk. That's what every time, like even what we do right now, like I'm always looking for that direction to go, to set up going to the directions with more like less risk and the easy scale business model. And number three, it's like you need to have a goal. Like you're not going to go anywhere if you don't set up a goal. Like you need to set up a long-term goal. Once you have that business model, you need to have long-term goal, and break down to a short time, and then you need to have exactly action plan how to get the short time step by step. So that's my key, I would say, for getting to new business or even doing things right now. Like that's my tips for this. Yeah.
That's good. Those are great. Hello. You're listening to the 5 Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review, and we're going to send you a free copy. So thank you so much for subscribing to the 5 Talents Podcast. We really appreciate it. Get a little bit of education, find your blue ocean, and then drive towards your goal, right? Break it down and deliver, right? So that's awesome.
Yep.
Blue ocean, describe this a little bit so that people understand. I think I have an idea when people say greenfield, blue ocean, but what does that mean to you? And explain this a little bit or elaborate on this.
Sure. So I would say, before real estate, I'll make it 2 examples. One's in real estate, one's not. For my parts business, I don't want to go compete with other big guys in there and fighting for, a lot. I'm looking for stuff people don't really look, or people think, not really have too much profit, but actually hiding a lot of profit in there. Make an example, my parts business, I'm focused on just one strategy, buy and sell very, top level, like a very good condition parts. But I know a company, it's kind of like, it's not a competitor with me, but I know the owner pretty good. And he have almost 10 times more employee than mine. And his space is almost 10 times than mine. And he's doing about the same sales what I do.
Wow.
So you can see what's, like my profit will be crush his company.
Absolutely.
And the reason why he do that, because he think everything come to him is opportunity, so he want to grab it. And I see a lot no to fake opportunities. I stick with my goal and know that strategy can be easy scale, less risk, and less timing, handling, energy, all that.
Yeah.
So that's one, right? In real estate, is like I want to have a large portfolio, right? Like long-term cash flow assets. And pretty soon I'm figure out, hey, single family, it's gonna be really hard for doing that. I'm not against single family. I'm just saying, like, if holding 400 units for single family property is going to be really hard to scale to that level, and above that it's even harder. But on a multifamily, it's easier, way easier to do. And compared, like that would be an example. I don't know if it makes sense, but
it makes perfect sense, man. I got a summary out of it. I'm like, man, easier skill, lower risk, and higher potential profit. And in the real estate example, single family versus multifamily, I mean, this is the wall I bumped my head up against for 10 years was in single family, and we made a little bit of profit. There was more competition. It was less profit. It was way harder, more cycles. And, now when I moved over to commercial real estate, so the doors kind of open wide up, and you're like, I went from 8 to 800 rather quickly. So let's, I'm going to transition a little bit our conversation, because you've got an amazing financial background, financial analysis, pro forma, just kind of the way you think about things. You didn't know much about commercial real estate, other than you knew that it was kind of the model that you wanted to go to. You knew that, there was some freedom baked into there, high profit, low risk, like you said, your blue ocean kind of area. Having no background to now being a team co-founder of Allstate's Capital Group, which you guys are on a tear right now, buying, looking at properties, making offers, raising capital, a ton of deals, recently. I think in the last, 3 to 6 months, just multi-millions of dollars kind of being raised, and then properties acquired. How did you do that? How did you go from, where you were to where you are today?
Yeah, sure. So obviously that's a team effort, right? In commercial is nothing. Commercial real estate is nothing like one person show. Like, we have pretty good team member. We got a great, like, COO, the head of acquisition, who got a great team for doing marketing. My partner's great. But at the beginning, that's really just a vision. Me and my partner was looking, where we want to go, all that. And it was just like one direction. And uh, which what's the destination? What's the goal we want to set up, right? And then we how to get there is it's like really day-to-day work to put everything together. I mean, we go through. We decided we want to do a value add because just um, it's harder for you know investors do value add, but for us, I think we have no problem on the action we're dealing with that headache. It is have a lot of headaches, but yeah, day to day, there's a lot of problem you need to fix when you especially set up the system on that. But again, once you have the business model you want and break it down with your goals is just really set up the machine and running the machine into there. It's it's just long run. You gotta look at it as a long run. It's not like a short race. You have to run like 100 miles per hour. It's just it's you need a balance. You need a whole team to balance to go with the direction you want to go. And during the time, like we do look at, hey, something jumped out. It seems like an opportunity, but we do have focus on where we are towards that direction. That's basically how to get there. I would say that's the secret of how to get there. Yeah.
That's it. Team up. We're such a team sport. Commercial real estate investing is not done by one individual, one person. You're pulling a team together, the best possible one you can put together with the resources that you have, and then we're all going after it. So you mentioned Javier Enojo. We've had him on our show, and he's really describes a lot of the motivation, the will, the drive to like go market like crazy, draw in a bunch of sellers, and then underwrite a bunch of deals. So let's talk about that part of it, because I have a feeling that you have your hands all over those part of the fingerprints are all over that part of the business. Sorry. And tell us about your operation a little bit, like how many deals you underwrite or work through, or how many offers you make, and what type of properties you guys are offering on, and just kind of illuminate a little bit the business that you guys have right now.
Yeah, so far, I think my acquisition managers every week will send out 25 offers, and the deals we go through, it's probably 4 times that. So the works like so Javier is more focused on, my partner is more focused on the marketing side. I'm more focused on the operation side. So when the deals pop up, seems like a good deal, and then we start digging more and start evaluating, and then moving forward, going to like a initial walks, getting more, learning more about this property. But we do cut a lot of smaller deals we can't handle, or like smaller market is, a lot of deals actually pretty good. So we do some of the deals we can handle for, if it didn't fit our criteria, we're selling to, other investors, or maybe we'll partner up with other investors. So we are focused on just getting, about 100 units range up, value add, B area, B and B plus area, and the C property, this type of the property.
100 unit C property with value add in a B neighborhood. Is that?
Yes, okay. That's right. And we do love, like, compared distress, there's two-way distress property. One is very bad condition, one is poor management. We also love just the poor management one. But yeah,
we all do. Yeah. And for the passive investors that are listening, let me frame this a little bit too. So we heard these qualifications, value add, we're trying to increase the property valuation up, and we're trying to do some kind of improvement to increase our net operating income, our cash flow, or income at the top line. So what Mu just said, well, there's a management and also a distressed property, like the property is really rough, HVAC, boiler, chiller, infrastructure, interior units, whatever. So that means that you're gonna have to do a ton of work. Or the other side, management play. No, actually, property's pretty nice. The management was horrible, and that's why it's distressed because there's no renters in it. So, anyways, I just thought I'd pause there and say it. So, thanks for clarifying.
Yep. Yeah, when it's property management problem, usually the condition is better, but it's less work for project managing.
Yeah.
And we do have one deal we're projecting ourselves,
Mm-hmm.
and then we decided we don't want to do that anymore because it's a lot of headache.
Yeah.
So that's also like our criteria is getting bigger units is because it's easier to have a more professional construction company involved to doing value add.
Mm-hmm.
One of the example it's we have a property in North Carolina, and after we start renovating and we found out the plumbing behind the bathtub actually need to be completely switched. So that will be at another 1,500 per unit right there on our budget. So that's another almost $200,000 raise in there. But I mean, it's good we got a great deal right there. Otherwise, it will be a really tight on number for things like that.
Yeah. Okay. Oh, that's awesome. And then a couple of things to highlight too. I don't want to gloss over this so easily because you guys make a ton of offers. So did I hear this right? 25 offers a week is kind of you're meeting with your team, going through their offers, 25 a week. And that really takes you maybe 100, because I heard 4 times as many that you're looking at. So underwrite, review, do the analysis on 100, and then 25% of them, which is, for 25 offers going out, 25% every single week, like clockwork. And then how many of those do you close? And what kind of time period is it? Like one a month that you guys are trying to close, or a couple of months, or do you have a number unit? Hey, we need 100 units every, so often. How does that work?
Yeah, so we had so that would be our goal for this year because we started last year really about this time. So it's like almost a year. Our first year goes we want to buy 34 million stabilized value, and we
34
finished
million
right.
stabilized value.
Yeah,
Yep.
and we bought 27 already,
It's awesome.
and we have a couple under in closing process right now, and probably not going to close before Christmas, before end of the year, but it will be definitely in January. So it's everything's fit, like going with our goals. Like next year we have higher goal, and we already, by this month, we're really just set up the goals for next year, and we don't really go with monthly because
By the year.
you want to close, but sometimes you never know because sorry, lost a little bit.
You broke up a little bit, but I think the last thing we heard is
uh,
you're not buying a monthly. You're looking at your potentially like a yearly number.
yeah, I'm more like a quarterly post because monthly, like you could have especially value add loan. It's really really important thing to get. A lot of times you're working with bridge. We had a couple of times this year we had problem with loan to close the deal. So I give you example like the North Carolina one I was just talk about. We got the deal super cheap. My COO actually cold called the seller, and seller want to sell the property. They own the property for a few years. Her husband bought a few years ago, and she's managing, and she just won for what she paid for. 6 or 7 years ago. So we bought really cheap, but it's low occupancy. It's about 50% in that time, and so the lender have problem to getting loan, but we commit, but close to the closing time, the lender cannot perform. They need another month to close, and the seller won't budge. Sellers that if you can't close at this, I'm gonna cancel the contract. So and this is actually our first deal we closed. And in that time we already lost one deal because COVID hit and the bridge lender won't do the deal.
Yeah.
So
Yeah. I'm in the
and I was
lending
like, if
side as
like
well. I'll go. Sorry. Go ahead, Moo. I think we're breaking up a little bit,
yeah.
but
So
go ahead.
exactly, we're facing two. So, and I was like, if we lost this deal, we just it's gonna be hard to close any deal. So, me and my partner, we put a cash to buy in this deal. I mean, we raised portion already, and then we just cash bought this deal and working on a reverse loan. So after I close, I leave the title open and start working with lender. And then we work on refund loan. Actually, the terms way better than Puchen's loan. Actually, give us, like we walk this way and get us another model. It's like, hey, if we got a really good deal, we just close it and then put a refund. We actually closed this way another deal like this, and the terms like way better. So it's like totally worked. But like to answer your question, it's like for a value add, a lot of times the timing is very fluctuate. So we're hitting the yearly goal, but quarterly we want to get into there. But eventually we want to do deals like more stabilized. That'll be more manageable.
Yeah.
Less headache.
Yeah. Well, even then, if your goal was 34 million in this year and you did 27, and with another one right around the corner, kudos to you guys. And like you said, you're just raising the bar, and next year goals will be even higher, so that eventually you can kind of get into some stabilized properties. Before you go, I'd love to hear some of this creative financing kind of insight, right? So I know you guys are marketing like crazy for off market commercial properties. And then also you kind of get into this distress part. And what I was going to say was I'm in the commercial loan space. So I know that most or a lot of the bridge lenders under $5 million kind of took a walk this year. I don't know if they'll be back, but that's kind of probably the situation that you're in, right?
Yep.
So what do you mean your loan? Like, break it down for us. How did you do that deal, the creative financing side of it? And this might illuminate some pictures for for some others that are trying to figure out how to, if they come across something nice, that they can do it creatively.
Yeah, absolutely. So I love creating financing deals, and basically, I'm trying every deals to see if we can do some for doing financing. So I usually, like we will like seller you need to carry like 70-80% net. We usually go seller can carry like 20% or 30%. In that way, and when I work on loan and the loan, if the LTV is lower, it still help make the deal works. Because once we want to make sure the investor is getting good returns. We want to make sure that number is still looking really good for investor. And so if we have owner carrying partially with like 4% or 5% interest 2 years, some deal maybe doesn't work, become a working deal, actually going to become a great deal. And it did work with us for a couple of deals for owner carrying partially, and in that like I can even like we can create a win-win situations. Owner want a little bit higher price, and we can afford that because this owner carrying part.
Yeah.
Yeah, minimum I want like 2-3 years carrying, 5 years average. I mean, even 10 years even better, but like we're asking like 2-3 years to 5 years carrying 20-30%. carrying 4 or 5% interest only. And we can work with the price with seller on that way. And if the bridge loan get, from before COVID is maybe 75% LTV and now become like 55 or 60,
Yeah.
and then the numbers still match, numbers still
Yeah.
work, cash flow
Yeah.
still okay. Yeah. Yeah.
Yeah. That's
So
awesome. So yeah, and for those that don't, kind of know that creative financing or owner carry is kind of Moo's talking about. I don't know. Let's just say round number, 10 million bucks. The bank would give you a loan for 80%, maybe 75, whatever. Let's just say they're going to loan you 7.5 to $8 million. So that means we have to come up with $2 million plus whatever the capital improvement budget is. So there's 3 million bucks that we're going to have to bring in cash. Well, if we're trying to pay our investors, you that are listening, somebody like that is 12, 15, 16%, what percentage, if it's really aggressive and you guys like the deal, well, think about it on the active partner, our side. It's like, well, I've got to pay an investor at 16% and they're happy with it, but it's like I borrowed $3 million on a 60% credit card. It's not very fun for me. So I'm trying to borrow as little as possible. And if I can get the seller to carry some of that, in other words, they will sell you the property and they know you're going to pay them, but just later. They don't need the cash now. They'll take it later at a 4 or 5 or 6% interest. Then that means the seller just lent us whatever amount he wants to finance, call it $1 million. And now I've saved myself as the active sponsor, like the spread of what he's charging me 5% and what I'm paying you as the investor. So that 10% spread is now savings. I'm borrowing it from him. I don't have to put $1 million into it. He's holding his money there. The bank still gives us the same kind of loan, and now I don't have to raise as much. And now the deal is better deal. That's creative financing. Did I describe that pretty decently,
yes.
Moo?
Yep. Absolutely. That's perfect. Yep.
Yeah. And so that's kind of, that if you can find the deals that work in this and space, that is, that's awesome. So the 27 million bucks that you guys have closed and the one that you guys right on the spot, they're like what, 50, 60 units, 30 units, 100 units? What kind of size, how many projects were they?
Well, total is 460 units,
Total
and
460 doors. That's awesome. Yeah.
yeah, total 400. There's some 72, 75, 208,
Mhm.
100, 117. Yeah, like this kind of size.
Okay, really good. Well, this is awesome. I've had a great conversation, and I think it's an amazing one because to have somebody like yourself that can pivot, that can transition, that can get into it. The reason I think it's so inspiring is like, man, if you have made up the decision in your mind to go do something, you can absolutely go do it. We can make it at any given point, and Moo's an amazing product of that. When he chose to do something, let's get after it. He's getting it done. So thanks a lot, man, for joining the show. If our
Thank you.
listeners, our viewers, yes, sir, thank you. If our listeners, viewers, somebody wants to get in touch with you, they want to learn a little bit more about what you're doing, or they want to invest with you guys in your company, whatever the case may be, how do our network get in touch with you?
They can email me at mu@ascgus.com. So Allstate Capital Group US.com,
Mm-hmm.
or they can get into our website, ascgus.com, and they can register. They can register the potential investor with us, and they will receiving our deal summaries, all that. This is the two ways.
All right. Thank you very much. Is there anything else that I didn't touch on? I didn't ask about something you wanted to highlight? We just didn't get a chance to talk about.
I would say, just for me, um, I come here to this country and don't speak any English, and don't really know this culture, like to start everything. And I know what the power if set up the goal and just do the action can do. I would just say, to a lot of you masters, you have enough knowledge already. All you need to do just just start action. You don't need a perfect knowledge to do anything. You get into there. I love, my partner always saying like, I'll just jump in the water before I know swimming. I'll say like, I'll learn a little bit and I'll jump and like, but it's really, taking action is really, really more important, because once you get there, problems, mistake, problem, that's just make you want to learn more and quicker. Don't be afraid that, and just get it started first, and keep learning, keep working, and you can achieve pretty much anything you want to achieve.
Love it. Thank you so much, Mu. I really sincerely appreciate it. And thank you very much for your time. Again, my name is Abel Pacheco. I'm your host for the 5 Talents podcast. If you heard something you like today, there's some kind of value point through this that resonated with you, I would encourage you, please subscribe to our show, leave us a rating and a written review. It'd go miles, and I really appreciate your time. Mu, thanks a lot for your time.
Thank you, Abel. If anything, you need me help or anything, let me know. Absolutely, I appreciate it today. Thank you. Bye.
Thank you. Thank you for listening to this episode of the 5 Talents podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who follow their dreams and achieve massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the 5 Talents podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the 5 Talents podcast.